Imagine unlocking a legal strategy in 2025 that lets everyday people earn double or even triple the returns of Wall Street, secured by real estate, and almost nobody knows about it. Welcome to your beginner's guide to Wyoming tax lien investing, where passive income meets real estate investing. In the next few seconds, you'll discover the secret strategy the wealthy have quietly used for decades, hidden in plain sight. Ready to unlock it? Here's a secret move only the savviest investors know. Wistawin goer bots re our bite sim sumper spore step that can multiply your returns if you act before the crowd catches on. Stay with me because I'll reveal exactly how Wyoming tax lien investing works and how you can start building passive income in 2025. Welcome to Morris Financial Hub, your trusted source for mastering alternative investments. Our mission is to demystify complex financial strategies and empower you to build wealth outside the stock market. We specialize in Wyoming tax lien investing, one of the most powerful and least understood real estate investing opportunities in America. Today, we're turning our focus to this hidden gem with a complete, beginner-friendly guide for 2025. What if I told you there's a corner of the real estate investment world, fully secured by property, that offers returns the stock market can only dream of on a good year? An opportunity that's been hiding in plain sight, while the big institutional money floods more popular markets? Today, we are pulling back the curtain on Wyoming tax lien investing, one of the most powerful and consistently overlooked opportunities in the entire country. While most investors are battling it out in the crowded auctions of Florida and Arizona, a quiet, high-performing market awaits those who know where to look. Wyoming offers a unique trifecta of advantages that make it an absolute powerhouse for this strategy. First, an incredible 18% annual interest rate on your certificate. Let's put that into perspective. That's not a potential return, it's a statutorily mandated penalty rate paid by the property owner upon redemption. Compare that to a high-yield savings account struggling to give you 5%, or the S&P 500's historical average of around 10%, which comes with daily volatility and significant risk. Here, your investment is secured by the real estate itself, offering a level of security that is virtually unmatched. Second, and this is critically important, is the remarkably low competition. Why is there so little competition in a state with such high returns? It's a perfect storm of factors: a lower population density, a more traditional, in-person auction culture in many counties, and a general lack of awareness among the national investment community. This translates into a massive advantage for you. It means fewer bidding wars, a higher probability of acquiring liens at the full 18% interest rate without having to bid it down, and a greater chance of being the winning bidder on desirable properties. It's like showing up to a gold rush before the crowds even know the gold exists. And the third pillar of the Wyoming advantage is its straightforward and investor-friendly legal process. If you've ever invested in other states, you know it can feel like navigating a legal minefield of convoluted redemption periods, ambiguous notification requirements, and costly procedural traps. Wyoming, by contrast, has one of the cleanest and most clearly defined statutory frameworks in the nation. The path from purchasing a certificate to either getting paid your 18% interest or applying for a tax deed on the property is clear, predictable, and codified in state law. This clarity minimizes your risk and allows you to invest with absolute confidence. Over the course of this guide, I'm going to walk you through everything you need to know to capitalize on this opportunity. And I don't mean a brief overview. We are going deep. We'll cover the entire spectrum, from the basic legal framework, defining every term and concept so a complete novice can understand, all the way to advanced strategies that seasoned professionals use to maximize their returns. We'll discuss how to perform remote due diligence, how to analyze county economic data to predict redemption rates, and how to identify properties that have the highest likelihood of eventually going to a tax deed, potentially allowing you to acquire a property for a fraction of its market value. Let me be clear, this will be the most comprehensive Wyoming tax lien guide available anywhere. We have meticulously compiled and cross-referenced information from state statutes, dozens of county treasurer offices, and our own on-the-ground experience to build a true masterclass. If you're new to this, don't worry. This entire guide is designed to be beginner-friendly and step-by-step. We will leave no stone unturned, and by the end, you will have the knowledge and the confidence to participate in your first tax sale. And if you're an experienced investor, perhaps active in other states, You'll get the advanced tips and nuanced strategies needed to sharpen your returns. We'll explore how Wyoming's unique laws regarding subsequent tax payments and the deed application process can be leveraged to gain an edge. You'll learn why adding Wyoming to your portfolio is a powerful strategic move to diversify your holdings and unlock a new stream of high-yield returns. So let's dive in. Remember the Wyoming trifecta: 18% interest, fewer bidders, clear rules. This is the foundation of the opportunity. For years, Wyoming has remained under the radar, a secret whispered among a small circle of savvy investors. But secrets don't last forever. The world is getting smaller and more investors are starting to look past the usual hotspots. The time to position yourself before the next annual sales season is now. Learning the system today puts you on the ground floor of an ascending market. Here's our exact roadmap for this masterclass. First, we'll establish the fundamentals of tax liens within Wyoming law. Second, we'll do a deep dive into Wyoming's unique advantages. Third, we'll walk through the complete legal process from A to Z, from finding sale lists to post-auction strategy. Fourth, we'll analyze the interest, returns, and the path to property ownership. And finally, we'll conduct a detailed county-by-county analysis to show you where the real opportunities are hidden. This is the point where you'll want to eliminate distractions. Grab a notebook, open a fresh document on your computer, because we are about to give you a complete blueprint for success in Wyoming. We'll begin with Section 1, Fundamentals, coming up next. And remember, everything you're about to learn is Wyoming-specific and fully updated for the 2025 sales season. This isn't generic advice. It's a targeted, actionable plan. Our goal is to help you build your investment plan the smart way, based on data and proven strategy. Let's build your Wyoming portfolio. The fundamentals are up next. What if I told you there's a little-known investment strategy, backed by the government and secured by real estate, that offers some of the highest interest rates in the entire country? It's not stocks, not bonds, and it's not about flipping houses. Welcome to the world of Wyoming tax lien investing. Wyoming is a tax lien state. This is a critical distinction you need to understand. When a property owner in Wyoming fails to pay their property taxes, the county doesn't immediately seize the property and sell it. Instead, to recover those lost funds for essential services like schools, roads, and first responders, the county sells a tax lien certificate to an investor. You, the investor, pay the delinquent taxes on behalf of the property owner. In return, the county gives you this, a certificate of purchase. This certificate isn't just a piece of paper, it's a powerful financial instrument. It legally transfers the county's right to collect the tax debt, plus a significant amount of interest, directly to you. You are not buying the property itself, you are buying the debt, which is secured by the property. This is a fundamental concept that makes tax lien investing a more conservative, income-focused strategy compared to the high-risk, high-reward world of tax deed investing, where you are buying the property outright. As the new lien holder, you now possess the primary legal right to collect that debt. Think of it this way, you've essentially stepped into the shoes of the county. You're not a typical debt collector, you're a priority creditor with a claim that is superior to most other types of liens, including many mortgages. Your investment is secured by the real estate itself. This means if the debt isn't paid, the property serves as the ultimate collateral. You are providing a short-term loan to the property owner, facilitated by the county government. The county gets its operating funds immediately, the property owner gets more time to pay their bill, and you, the investor, are positioned to earn a handsome, legally mandated return. This entire process is designed to be a win-win-win, ensuring community services remain funded while offering a secure opportunity for investors. Now, let's talk about the number that gets everyone's attention. Wyoming offers a potential return of up to 18% annually, which is among the highest in the nation for tax liens. But it's crucial to understand how this is calculated, because it's actually even better than it sounds. The return is composed of two parts. First, there is an immediate 3% penalty on the amount of the delinquent taxes. This is your instant return. If you buy a lien and the owner redeems it the very next day, you get your entire investment back plus that 3% penalty. The second part is a 15% annual interest rate that accrues on your investment. Let's run a simple example. Say you purchase a tax lien for $2,000. If the property owner redeems the lien 6 months later, you would receive your original $2,000 plus the 3% penalty of $60 plus 6 months worth of the 15% annual interest, which is another $150. That's a total of $2,210 and 10.5% return in just 6 months. If they wait a full year, you get the full 18% return. This structure heavily incentivizes prompt redemption and provides a powerful, predictable return on your capital that is nearly impossible to find in other secured investments. This isn't some unregulated Wild West investment scheme. The entire process is meticulously governed by Wyoming state law, specifically Title 39, Chapter 13 of the Wyoming statutes. I encourage you to look it up. This statute is the investor's playbook. It provides crystal clear guidelines for everyone involved. It dictates how counties must notify property owners of their delinquency, the exact procedures for how the tax lien sales must be conducted, what your rights are as a certificate of purchase holder, the specific interest and penalties you are entitled to, the 4-year redemption period given to the property owner, and, crucially, the legal process for foreclosure if the lien is not redeemed. This legal framework provides a level of transparency and predictability that is paramount for any serious investor. It removes ambiguity and ensures that as long as you follow the rules, your investment is protected by the full force of state law. It's vital to distinguish this from investing in tax deed states. In a tax deed state, you are bidding to purchase the actual property itself, often for just the cost of the back taxes. While the idea of acquiring a property for pennies on the dollar sounds incredibly appealing, it carries substantial risks. You could be responsible for evicting current occupants, you might inherit a property in catastrophic disrepair, or you could face significant legal challenges to secure a clear title. In Wyoming's tax lien system, your primary objective is not to acquire the property. Your goal is to earn the high interest rate. Over 95% of all tax liens in Wyoming are redeemed by the owner. This means you should view this as an income-generating investment, not a real estate acquisition strategy. The possibility of foreclosure is your safety net, not your primary target. This makes it a fundamentally more conservative and predictable investment, focused on generating a steady stream of high-yield returns. So, what are you really buying? You're buying a financial instrument, an asset class, all its own. Think of a tax lien certificate like a high-yield corporate bond, but with a much stronger form of collateral. Instead of being backed by a company's promise to pay, your investment is secured by a tangible, physical asset, a piece of Wyoming real estate. Your claim on that property is in a superior position, meaning you get paid before most other creditors in the event of a default. The rules are not subject to market volatility, corporate earnings reports, or Federal Reserve announcements. They are written in state law, making the entire process predictable and transparent. You know your potential return, you know your rights, and you know your investment is secured by a hard asset. This combination of high yield and high security is the magic of tax lien investing. Let's walk through the life cycle of a tax lien. It begins with delinquency, when a property owner misses the tax payment deadline. The county then enters the notice and publication phase, where they are legally required to send multiple notices to the owner and publish the list of delinquent properties in a local newspaper. This publication is your signal to start your research. Next comes the main event, the tax lien sale, where investors bid for the certificates. If you are the winning bidder, you pay the delinquent taxes, penalties, and costs to the county, and they issue you the certificate of purchase. From that moment, a 4-year clock starts ticking. This is the redemption period. The vast majority of the time, the owner will redeem the lien by paying you back everything you paid, plus your full 3% penalty and all accrued interest. If, and only if, the 4-year period expires without redemption, you can then begin the legal process to apply for a treasurer's deed and foreclose on the property, becoming the new owner. So when does this all happen? Tax sale season in Wyoming is a specific window. Counties typically hold their annual sales between May and August. You'll need to check with each individual county treasurer's office for their exact dates and procedures. Traditionally, most of these have been straightforward oral auctions, held in person at the county courthouse. This classic format involves the treasurer announcing a parcel and the delinquent amount, and investors calling out their bids. However, the landscape is changing. More and more counties are adopting online auction platforms. This is a game changer, as it opens up the ability to participate and invest from anywhere in the world. breaking down geographical barriers for savvy investors. This is the point where amateurs get wiped out and professionals build lasting wealth. Your success hinges on 3 pillars: preparation, knowing the rules, and bidding with discipline. Preparation means doing your homework, your due diligence, before the auction. Get the delinquent property list as early as possible and research every single parcel you're interested in. Know its location, its type, its approximate value, and any potential issues. Secondly, know the rules. Each county may have slight variations. Is it a premium bid auction where you bid up the price? You must know the specific bidding method before you even think about participating. Finally, and most importantly, bid with discipline. Auctions are exciting and competitive. It's easy to get caught in a bidding war and overpay. You must determine your maximum bid for a property during your research phase and stick to it, no matter what. Emotion has no place in a successful investment strategy. Let's be perfectly clear about your goal. Your best case scenario, the outcome you are actively seeking, is redemption. Remember, over 95% of liens are redeemed. This is your bread and butter. You deploy your capital, it's secured by real estate, and it comes back to you with a high, legally mandated interest rate. It's a powerful way to generate a predictable income stream. Your longer play, your ultimate safety net, is the potential for foreclosure. This is the what-if scenario. If the property owner does not redeem the lien within the very generous 4-year period, you then have the right to apply for a treasurer's deed. This process extinguishes other liens and can grant you ownership of the property free and clear. While acquiring a property for the cost of the back taxes is an incredible outcome, you should never buy a lien on a property you wouldn't be happy to own. The possibility of foreclosure is what makes your investment so secure, virtually eliminating the risk of losing your principal. For both of these outcomes, due diligence is the non-negotiable key to protecting your capital. You must investigate the properties before you bid. Is the lien on a valuable home in a growing subdivision, or is it on a worthless landlocked sliver of desert? Use county GIS mapping tools, Google Earth, and online assessor data. A few hours of research can be the difference between securing a fantastic investment and buying a worthless lien. You need to verify the property's location, assess its general condition and value, and check for any significant issues that might complicate things down the road. Never, ever bid blind. If you're a beginner, this can all seem overwhelming, but it doesn't have to be. Here is your simple, 5-step action plan. First, set a firm budget. You can start with as little as a few hundred or a few $1,000s. Don't overextend yourself. Second, pick just 1 or 2 counties to focus on. Learn their specific rules and sale dates. Third, contact the county treasurer's office. They are your best friend in this process. Ask for the auction rules and the delinquent property list. Fourth, begin your research on the properties. And fifth, after you successfully purchase a certificate, you must track it. Create a simple tracker in Excel or Google Sheets. Log every certificate you buy, record the purchase date, the amount, the parcel number, and most importantly, the 4-year redemption deadline. As your portfolio grows, this organizational tool will become indispensable for managing your investments and ensuring you never miss a critical deadline. Stay consistent with your tracking and you'll build a professional, scalable operation. So we've covered the core mechanics of tax lien investing, but you might be wondering why the intense focus on Wyoming. What makes the cowboy state a true standout? A hidden gem for savvy investors. It's the unique combination of advantages that you won't find anywhere else. We're talking about the high interest rate, the exceptionally long 4-year redemption period, which maximizes your potential interest earnings, and a clear, straightforward legal framework. Let's explore these unique advantages. The appeal is undeniable. You have the compelling combination of high, government-mandated interest rates, and the predictability of a process enshrined in state law. It's a system designed to work, providing essential funds for counties and a secure investment vehicle for you. From the high interest rates to the legal predictability, Wyoming's system is incredibly compelling. This process isn't happening in some backroom. It's administered right here, in county courthouses and government buildings across the state. It's a public, transparent function of local government, which adds another layer of security and legitimacy to your investment. Whether it's the sound of a gavel in a live auction, or the click of a mouse in an online sale, this is the moment your capital's put to work. It's the start of a 4-year journey that almost always ends with a profitable redemption, securing your investment and your returns. So, to recap the fundamentals, Wyoming is a premier tax lien state offering up to 18% returns. The entire process is governed by statute, making it safe and predictable. Your investment is a secure financial instrument, backed by the ultimate collateral, real estate, and your primary goal is to achieve a high-interest redemption, with the power of foreclosure as your ultimate safety net. Mastering these fundamentals, understanding the certificates, organizing your research in spreadsheets, and pinpointing valuable properties on the map, is your first step toward becoming a successful investor in this space. It's a journey of diligence, but the rewards are well worth the effort. Let's bring these fundamentals to life with a real story. Meet the Johnson family, Wyoming locals who turned a simple idea into a new financial future. 3 years ago, the Johnsons wanted to diversify beyond the stock market's ups and downs. With 2 kids and busy jobs, they needed something stable and realistic. After hearing about tax lien certificates at a local seminar, they decided to try it. Their first auction was overwhelming, confusing paperwork, fast bidding, and lots of uncertainty. Instead of giving up, the Johnsons got creative. They called county officials for help, watched online tutorials, and built a color-coded spreadsheet to track every property, location, value, and auction date. Their first challenge was competition. After being outbid twice in bigger counties, they shifted focus to smaller, rural auctions, where fewer investors meant better chances. Over 2 years, the Johnsons invested in 12 tax lien certificates, mostly single-family homes and a few small commercial lots. They stuck to their research and budget, only bidding on properties they'd be happy to own. The results? Out of 12 certificates, 11 were redeemed within 18 months. The Johnsons earned over $3,200 in interest, a blended return of 16%, and reinvested their profits each year. On one rural property, the owner never redeemed. After the redemption period, the Johnsons acquired a small parcel of land. Now, their favorite family camping spot. Their journey proves that with preparation, creativity, and a willingness to adapt, anyone can succeed in Wyoming's tax lien market. The Johnsons aren't financial experts, they're everyday people who followed the process, learned from mistakes, and built a new stream of income while protecting their principal. Their story is proof. With the right approach, tax lien investing in Wyoming can be both profitable and life-changing. First, the interest rates are among the highest in the country at 18% per year. Second, the redemption period is exactly 3 years, giving you predictable timelines. Third, Wyoming has only 23 counties, making it manageable to research the entire state. Fourth, the population density is low, meaning less competition at auctions. Fifth, Wyoming has no state income tax, making it attractive for property ownership and investment. Finally, the state's energy-based economy provides stability and high property values in key areas. High interest, predictable timelines, manageable research, low competition, tax-friendly, and a stable economic base. That's a powerful combination. Next, the complete legal process, step by step. Let's walk through it. Step 1. Tax delinquency. Property taxes become delinquent on January 1st if not paid by December 31st of the previous year. Counties must wait until May 1st before beginning the tax sale process. Step 2. Notice and publication. Counties publish notice of tax sales in local newspapers for 4 consecutive weeks. Property owners receive certified mail notices at least 30 days before the sale. Step 3. Tax lien sale. Sales typically occur between May and August, varying by county. Most counties conduct oral auctions, though some use sealed bid processes. The The minimum bid is the total amount of delinquent taxes, penalties, and costs. Arrive early, register correctly, understand bidding increments, and confirm payment terms. Stay disciplined. Skip parcels you haven't researched. Patience beats impulse. Next, certificate issuance and redemption. Step 4. Certificate issuance. Winning bidders receive a tax lien certificate showing the amount paid, property description, and legal requirements for redemption. Store copies safely, both physical and digital. Step 5. Redemption period. Property owners have exactly 3 years from the date of sale to redeem by paying the certificate holder the original amount plus 18% annual interest. Counties process redemption and remit principal plus accrued interest to you. Interest accrues monthly in Wyoming, so tracking matters. Step 6. Foreclosure process. If not redeemed after 3 years, certificate holders can begin foreclosure proceedings to obtain clear title to the property. Use local counsel familiar with county procedures and timelines. Expect title work, notices and filings before you can convey or refinance. Calendar every deadline, keep proof of mailing, and preserve receipts. Know your exit, redemption income or property acquisition. Organization is profitability. Next, let's calculate the returns. Wyoming's 18% annual interest rate is calculated monthly, meaning you earn 1.5% per month on your investment. Here's how it works. If you purchase a $1,000 tax lien certificate, after 1 year you're owed $1,180. After 2 years, $1,360. After 3 years, $1,140. This compounds monthly, so your actual returns are slightly higher due to compounding. Track accrual monthly, to reconcile redemptions accurately. A $500 certificate becomes $770 after 3 years. A $2,000 certificate becomes $3,080 after 3 years. A $5,000 certificate becomes $7,700 after 3 years. These are guaranteed returns backed by real estate, making Wyoming tax liens one of the safest high-yield investments available. Use a diversified basket of liens across counties and property types. Now, let's analyze counties and build your target list. First up in Tier 1 is the state's anchor, Laramie County, home to the capital city, Cheyenne. With a population exceeding 100,000, it's Wyoming's most urban center. For investors, this is the big league. Think of it as the most predictable and stable market, but also the most competitive. The economy is a powerful trifecta of government, military, and transportation. State government jobs provide a steady employment base, insulating it from market volatility. This is reinforced by the massive F.E. Warren Air Force Base, a huge economic driver. Finally, its location at the crossroads of I-80 and I-25 makes it a key logistics hub. This stability means property values are strong, and the liens you acquire are on fundamentally sound assets. The sale is typically held in June, often kicking off the tax sale season in Wyoming. This timing attracts a lot of attention, so be prepared. You'll see a healthy list of 200 to 300 certificates, but the competition is moderate. You'll be bidding against savvy locals and regional players. Success here requires deep due diligence. The available properties are diverse. Desirable single-family residential homes, commercial lots with high traffic on Natrona, and vacant land on the path of Cheyenne's expansion. The key success factors are clear. The economic stability from the capital and the military base creates a low-risk environment. While you might face more bidders, the quality of the underlying real estate is often worth the premium. Next, we travel north to the heart of Wyoming's energy economy, Natrona County, with its central city, Casper. With a population of over 80,000, Casper serves as a crucial hub for the entire state. If Laramie is the stable government town, Natrona is the dynamic energy giant. Its economy is heavily rooted in oil, gas, and mining. This creates a fascinating boom and bust cycle that savvy investors can leverage. During downturns, delinquencies can rise, presenting opportunities to acquire liens on valuable properties. However, this volatility is balanced by the stabilizing presence of the Wyoming Medical Center, a major regional healthcare provider that ensures a level of consistent employment and economic activity. This blend of energy speculation and healthcare stability is unique to Natrona. The sale usually takes place in July, conveniently following the Laramie County sale. This allows investors to potentially attend both. Expect a slightly smaller list, around 150 to 200 certificates annually. The competition here is low to moderate. You'll see fewer of the large institutional funds, making it a potential sweet spot for individual investors who can't compete with the deepest pockets in Cheyenne. One of the most intriguing aspects of Natrona County is the property types. Alongside typical residential and industrial properties tied to the energy service sector, you'll frequently find tax liens on mineral rights. This is a highly specialized area of investing that can offer explosive returns, but it requires expert-level due diligence. The primary success factor here is understanding and leveraging the energy market. If you can read the cycles, Natrona County offers a fantastic balance of opportunity and manageable competition. Our final Tier 1 destination is Campbell County, centered around Gillette, the undisputed energy capital of the nation. With a population of around 47,000, this county is a pure play on the energy sector, specifically coal. This is the high-risk, high-reward opportunity in Tier 1. The economy is dominated by the massive coal mines of the Powder River Basin. This singular focus means the county's fortunes rise and fall with the price of coal. High-paying mining jobs support a robust housing market with valuable real estate. When the energy market dips, delinquencies on these valuable properties can spike, creating incredible opportunities for investors who aren't afraid of volatility. The sale is often in late June or early July, sometimes creating a scheduling conflict with Laramie's sale, so you may need to prioritize. The list is the smallest in Tier 1 with 100 to 150 certificates, but the key here is the low competition. Many larger investors are scared off by the lack of economic diversity. This is where the prepared investor can shine, often acquiring certificates with little to no competitive bidding. Property types are heavily influenced by the local economy. You'll find residential properties, often newer homes built for the mining workforce, commercial lots, and unique mining-related parcels. The success factor is simple: embrace the volatility. Campbell County is for the investor who has a high-risk tolerance and has done their homework on the global energy markets. The high wages create a high baseline for property values, meaning the potential rewards for a successful foreclosure are significant. So to recap Tier 1, Laramie offers stability. Natrona provides a balanced mix of energy and services, and Campbell is a high-octane play on the coal industry. Together, they represent the best opportunities in Wyoming for both volume and quality. To succeed here, your strategy needs to be sharp. First, get the parcel lists the moment they're released. Preload them into your mapping software, and begin your due diligence immediately. Your goal is to create a hot list. We recommend flagging two specific types: owner-occupied homes, which have a very high redemption rate, and what we call clean vacant land, parcels with clear legal access and favorable zoning. Second, look at the calendar and stack the dates. You can create an efficient tax line road trip by hitting the Laramie sale in June and then driving north to the Natrona sale in July. Finally, allocate your capital accordingly. These counties are where you'll find the most promising assets, so plan to deploy a significant portion of your budget here. Be prepared to move fast on auction day. Your research should be so thorough that when a parcel number is called, you already know your maximum bid. In Tier 1, preparation is everything. Albany County, Laramie. Population, 37,000, would replace. Economy, University of Wyoming. Agriculture, sale timing, June. Average certificates, 75-100 annually. Competition, low. Property types, student housing, residential, agricultural. Success factors, university stability, educated population. Sweetwater County, Rock Springs, Green River. Population, 42,000 plus. Economy, mining, energy, transportation. Sale timing, July. Average certificates, 80-120 annually. Competition, very low. Property types, residential, industrial, vacant land. Success factors, Interstate 80 corridor and the energy industry. Tier 2 counties are ideal for steady accumulation and lower bid pressure. In Albany, focus on student rentals and infill lots near services. In Sweetwater, use extra diligence on industrial adjacency and access. Sort your list by competition and yield to prioritize. Plan travel or remote participation where allowed. In the next section, we'll extend this with advanced strategies and field prep.